All right, real quick, I'm going to talk really briefly about something that nobody knows about, and I will promise you this will blow your mind. This is an account where it is a triple tax advantage. We'll go through the three things, but let's really talk about this. People really don't know about this because it's called a HSA. Now, what a HSA is, a health savings account. Now, hear me out through this whole video. Do not click off this video. Wait until the end because you will be blown away. I always talk about on this channel, finances. I'm Jody Black. Welcome to my YouTube channel where we talk about everything finance. Now, we talk about Roth IRAs here, 401ks, and your traditional IRAs. Everybody thinks this is the best retirement account when you're talking about Roth IRAs and traditional IRAs or your 401ks. But nobody talks about the triple tax advantage account, which is the HSA. I know what you're thinking, health savings account, Jody, it's not going to help me invest. You're completely wrong. Now, let's talk about how you can be qualified for HSA. Go to your employer. You ask your employer for a high deductible health plan, right? A HDHP. Now, I know what you're thinking. Well, I want cheap insurance where I don't have to pay a high deductible. If you are young and healthy, and I'm talking to you, young and healthy, right? This is an account for you. Now, if you're someone that continuously has to pay for health plans, this might not make sense for you, right? But hear me out anyway. A HSA is a tax advantage plan. What do I mean by that? Now, you have the money going in, which is pre-taxed, meaning if you make $100,000 a year and you max out this account at $3,700 and you're single, right? Because in the year of 2021, it's 2022 now, but in the year of 2021, they have it that you could put $3,600 in this account, an HSA account, which means if you make $100,000 a year and you're putting $3,600 in that account, the IRS now is not looking at it as $100,000. They're looking at it as if it's a minus $3,600 on that $100,000. Now they're taxing that income instead of the $100,000, right? So now they're looking at it as $36,400. So that's the one tax advantage. Second is the contributions that you put in, the interest and the dividends on that money is tax-free. Now the third one is very special because you can use the HSA as if the third one is the medical expenses that you take out is tax-free if you use it only on medical expenses. Now, that's what a HSA is. A HSA is a tax advantage account that you use on medical expenses only. Hear me out. I know it does not sound appealing to the ear. Stick with me to the end. I promise you. A lot of people aren't talking about this. In my opinion, because I'm not a financial advisor, I must say this for YouTube, but in my opinion, a HSA makes so much sense because it doesn't offer what the traditional IRA does or the Roth IRA does. Because if you think about your traditional and your Roth, yes, the traditional is pre-tax. Yes, the contributions are tax-free, but you can't withdraw on medical expenses every time at a tax-free rate. So you just got to think about that. Pre-tax, the IRS doesn't look at your whole income as far as your contribution. Also, if you go to your employer, they'll match. A lot of times your employer will match up to 4%, right? So which means if you make $100,000 a year and you're paying $3,600 into that account, they'll match dollar for dollar whatever you put in. So why not take advantage of that? You have to have an HDHP, high deductible health plan, to use this account. Now, I've written down some things that are disadvantages, and just hear me out. We'll talk about that a little later. But I really just wanted to go over this because a lot of people aren't talking about this. If you're 18 years old and you are stepping into your career, you went to trade school and high school, these are the things that you have to think about. I talk about this all the time. There's fundamentals to money, right? Go ahead and increase your income. Somehow, some way, increase that income, side hustle, whatever it may be. Create you an emergency fund. You want to create that emergency fund if you ever get fired. If a pandemic happens, you got to think about COVID. To where you'll be 6 to 18 months, you'll be good, right? Medical expenses, you get into a car accident, you have that emergency fund. But a HSA, never spend the money in the HSA, right? And I'll tell you why. Well, Jody, if I have an HSA, I'm saving money for my medical expenses. Why not use it? Triple tax advantage, like I just explained. That means your contributions pre-taxed. The money that is in that account is not taxed. Dividends, interest, right? And then any medical expenses that you have to pay for is not taxed. It's not penalized. It's nothing like that. With a traditional and a Roth, anything that you take out is going to be penalized at 10%. Now, if you take money out of this account and use it for something else, it will be penalized at 10%, and anything that you take out will be taxed as regular. Do not do that. This is how the wealthy use HSA. They use it because you want to think of this and not be selfish, right? You want to think about your kids. You want to think about building generational wealth, right? So obviously you have your traditional or your Roth IRA or your 401k through your job. That's building you wealth for yourself. And at 59 and a half, which is still young, you got to understand that, which is still young, you'll be able to retire a millionaire. Now, I've written down some numbers that we'll go over, so I won't forget to tell you. But think about this, right? You're 30 years old, right? And I wrote this down, so I really want to go over this. If you're single, you put in $3,600 a year for 30 years, right? At 7% return, you'll have $340,058.83, right? Now, that's how much you'll be able to put in if you're single. Now, if you're married, and you'll be able to put up to $7,200, right? So if you're married, $7,200. If you're single, $3,600. So $7,200 over a 30-year period at 7%, you'll have $680,000, right? So you really want to think about that, right? It's just like Donald Trump said, right? His dad gave him a small loan of $1 million, which sounds ridiculous. Don't be selfish. Think of it, a HSA account, as a triple tax advantage that you can use just by having a high deductible health plan, that you can give to your kids. Because when you turn 65, you do not have to use it on medical expenses. You can use it on whatever you want. The only thing is you have to pay taxes once you withdraw everything. Okay, so you really want to think about that. Now, like I said, on this financial channel, we are completely transparent. So I wanted to go over some things that are written down that you have to watch out for HSA. We already went over one, which is you'll be penalized at 20% if you take out money on anything that is not medical expense related. And when you go through your job with an HDHP, ask for HDHP, ask for a health savings account, they'll offer you some accounts. What you have to look out for is fees associated to this account. There are some accounts that have no fees at all, and this is what you want to look at. What are some of those accounts, Jody? Well, you got Lively and you got Fidelity are the top two. I would go with Fidelity. This is a well-known platform that you can utilize and have no fees associated with that. Now, this is not a savings account. I know it's called an HSA. This is an investment account that you can use to maximize your money. Your money is going to grow, right? So this is how this is the secret of wealth, right? A lot of people are not utilizing this. They know about the Roth IRAs. They know about your traditional 401ks. And obviously you want to utilize those accounts first, max out those accounts first. I don't really suggest maxing out a 401k. You just want to match what your employer matches. I'm not a financial advisor. This is entertainment purposes only, but this is what I do. This is how we build wealth, right? We talk about building wealth on this channel. So do that. Max out your Roth IRA or traditional IRA if you do not have a 401k match at your job. Then you go with the HSA, triple tax advantage, right? Not only that, you'll be building generational wealth with this money. Because when you turn 65, you'll be able to, like I gave you the numbers, right? I gave you the numbers. $3,600 every year over 30 years at 7% will be $340,000, right? If that number doesn't sound good to you, you are sadly mistaken. This is a tax advantage account that you utilize after you have everything diversified. You don't want to put your eggs all in one basket. A HSA is something that you really want to utilize. A lot of people tell me all the time, well, Jody, I would just use a credit card for my medical expenses. Use an HSA credit card. It comes with a debit card and a credit card. Now, I don't, say if you get into a car accident, and your medical expenses is $5,000, you have a $10,000 credit limit. You utilize 50% of your credit card at $5,000 using $10,000 of your credit limit. So what you got to think of is create an emergency fund before you even get involved in investing. I talk about this all the time. So at HSA, I told you if you stick to them, we'll talk about some disadvantages. Administration fees, like I said, Fidelity does not have any administration fees. Now you have to go to your employer and ask what platform do they use, so you can know what that administration fee is. Now the other thing I wanted to talk about, like I said, 20% penalty if you take that money out and use it for something else. You always want to keep your receipts. If you do use this account, if you absolutely must use this account for medical expenses, you want to keep your receipts because the IRS will need to know that. But it's a tax advantage account that IRS looks at. Like I said, I gave that example, $100,000, right, will be looked at as $96,400 if you max out that account for that year. All right. And so you really want to think about that. And then the last one I have is know where your money is being invested, right? So do your own due diligence. I talk about this all the time. You got to know where your money is being invested. So it's not a savings account. It's really an investment account after you already invested into your 401k or your individual retirement accounts. So a lot of people aren't talking about this. This is a triple tax advantage. You really want to take advantage of the triple tax advantage. I like that. You really want to take advantage of the triple tax advantage. So the other thing you want to look out for is you want to be invested in low cost index funds, right? Low cost index funds that match what the S&P is doing and things like that. Things that's going to give you over 7% growth, right? And so I know individuals that been investing in this account, and you know, for myself, I do the same, that have grown 25% in the last year with that account. So you really want to think about this, especially if you're married. You could pay $7,100, or is this $7,200? Sorry, $7,200 of your money and max that account out. If you're someone that is making 6 figures a year, max it out before you even think about investing in individual stocks, right? Because individual stocks is the riskiest ones. All right. And I hope I helped you with this information. If you absolutely have to use money in that HSA, obviously go ahead and do that. I know it's very difficult to save an emergency fund, but those are steps 1 and 2 before you even start investing into your Roth IRAs or your 401ks. You want to create an emergency fund for those medical expenses, because this right here, this health savings account, is going to be compounding over 30 years to where you just create a generational wealth. You understand me? So now you have a small loan of $1 million for your kids. Hope I helped you on this. If I missed anything, if you want me to really explain this in more detail, I hope I've already done so. Just comment down below. But until the next one, I see you on every Wednesday. Please make sure to subscribe, like, comment, and share. We talk about everything finance on this channel. I love y'all. I see y'all then.